Hello investors, welcome to Proceemo, the value stock analyzer. Today is January 23rd, 2023. Last week we covered a value beast in InMode, a highly profitable medical devices company based out of Israel. The sky is the limit for InMode right now, so for this week I wanted to get more grounded again. Maybe a little too grounded and slightly more controversial. This week we're covering AMC, a meme stock darling whose best days are very likely behind it. I say likely behind it because, well, the internet revived this stock once before. Who's to say it won't happen again? Don't forget to like and subscribe. Your support will help us continue making content for you. And please check out Proceemo.com to see the following analysis for yourself. Another reason I wanted to pick AMC this week is because my local Regal Cinemas announced this week it was shutting its doors and turning off the projectors for the last time. And this definitely makes me a little sad. I loved going to the movies as a kid, and the Regal was the nicest theater close by. The only other theater decently close is an AMC theater, and I instinctively think, I can't believe that place is still in business. I mean, it's not bad, but they don't have IMAX, so how am I supposed to see Oppenheimer later this year? AMC was founded in 1920 out of Kansas City, Missouri, and they are the largest cinema chain in the United States. The company has an interesting founding story, having been founded by folks doing traveling theater, settling down, buying a stage, and eventually turning it into a cinema. They slowly expanded over the decades, taking the plunge into multiplexes in the 1960s and seeing huge growth from there, so much so that they went public in 1983. In 2004, the company was bought by private equity, taken private with plans of corporate restructuring, and taking public again, which they finally did in 2010. And then in 2012, a Chinese conglomerate called Wanda Group bought the majority of AMC shares and took over its board and all voting decisions. And that's the end of the story. Ha, just kidding. Now it gets fun. The acquisition made Wanda the largest cinema company in the world. There were more shakes and moves made over the years. Notably, AMC acquired Carmike Cinemas in 2016, which is what put AMC over the top in the US market as the largest cinema chain. In 2018, Wanda sold $600 million worth of shares to a US private equity firm, Silver Lake Partners. Still, Wanda maintained control of the board. Then the pandemic hit and all hell broke loose. I'm not going to cover this in fine detail. It's been done before by far better storytellers than myself. The bullet points are: AMC was heading to bankruptcy fast, like real fast. People were on lockdown, movie theaters were not operating, and even if they were, attendance was sparse because who wants to be stuck in a room for over 2 hours with the infected? As a result, the stock started to tank. Reddit group Wall Street Bets was in the midst of inducing chaos in the markets for the sake of activism, I guess. I don't know if it was activism as much as chaos for the sake of chaos. I'll leave that for you all to decide. Point is, they ran up the stock price a lot. Like, so much so that AMC was able to issue more shares and raise a ton of cash when it needed it most. Definitely enough cash to weather the storm. Thanks, Reddit. This episode also coincided with Wanda restructuring its shares, and the restructure ended up with them losing control of the board, funny enough, though they still are the largest single shareholder of AMC. Today, AMC is alive in its current form because of the massive cash infusion from the meme stock counterplay on Reddit. Is it enough to propel AMC into profitability and long-term growth? Feels unlikely. Let's take a look at the numbers. AMC is currently trading at $5.52, up from its 52-week low of $3.85 on January 6, 2023, just a couple weeks ago, and down from its 52-week high of $29.44 on March 29, 22. Quite a roller coaster with mostly downward momentum. AMC is not profitable and has not been profitable in the last 4 years. The pandemic has a lot to do with that, to be certain, but even before the pandemic, the cinema business was not trending in a great direction because of in-home streaming. Earnings per share is negative $2.05, and we don't have a PE because you need to be profitable to have a PE. AMC's market cap at its current price is $2.83 billion. Revenue suffered during the pandemic and is slowly coming back. Pre-pandemic, AMC was hitting revenue near $5.5 billion. Then they dropped to $1.24 billion, back up to $2.53 billion in 21. In 22, they've reported 3 quarters worth of revenue, and it's already at $2.55 billion, and a good Q4 could put them over $3.5 billion in revenue. This is good. Still not back to pre-pandemic levels though. Earnings is similar. 2018 was their last profitable year with $110 million in earnings. Then even before the pandemic, they reported a negative $149 million at the end of 19. Then peak lockdown, 2020, they reported negative $4.59 billion in earnings, and then negative $1.27 billion in earnings in 21. Through 3 quarters this year, they are at a negative $624 million in earnings, so they have a good chance of getting earnings to improve, which is good. Still not profitable though, with some serious work to do to get to profitability. The charts tell us an interesting story. Looking at revenue versus earnings, we can see even when revenue was peaking in 17, 18, and 19, earnings were hovering around profitability. Usually we see charts like this for businesses with razor thin margins, and the theater business is a razor thin margin kind of business. Stop complaining about your $8 popcorn. These places are struggling to get by. Assets and liabilities also tell us a story, and that story is that liabilities are outpacing assets. We hate to see that for established businesses. It's not a great sign. AMC has not been shy borrowing money to try and regain some semblance of stability, and they are on the path towards stabilizing, to be fair, but it is slow. To the scorecard, we don't really want to consider implied growth for companies that are not profitable. Liabilities over assets is at a staggering 1.17%. We say anything over 0.6 is over leveraged. AMC is nearly doubling that ratio. The ratio is looking at their last annual report too. The ratio as of the latest quarterly report is actually 1.28, so it's not trending in a great direction either. The reason is because of their cash position. It's shrinking. Prior to the pandemic, they hit a low of $321 million in cash. The meme stock push allowed them to sell a bunch of stock and pile on some cash, up to $1.8 billion, but that stockpile is diminishing fast, only $705 million as of September 22, and to make matters worse for shareholders, they had to dilute the stock to raise that money. It was a good short-term move to raise money, not a great long-term move because the value per share is definitely less now. AMC does have more assets than its market cap, usually a positive sign, but their debt outweighs their assets, therefore it's not that exciting. There's not a whole lot more to say on AMC. It's not a good value stock right now. It's not as bad as Bed Bath & Beyond though. There is still room to turn the ship around. Bed Bath & Beyond has maybe months to live. AMC probably has 1 to 2 years without any improvement. It does have time. Could Reddit save AMC for a second time? The answer to that is maybe. But even with more cash, AMC needs to improve its business model. If activists spike up the price again and AMC issues shares to take advantage again, it's just diluting itself for more cash. That's good for its cash position, but it makes the fall even worse if they can't improve the business. Wall Street Bets would do far more service to AMC by getting off their keyboards and phones and seeing a movie in the theater. That's it for today. Please like and subscribe if you found this helpful, and if you really want to support the channel, please go to Proceemo.com and subscribe to our monthly service to see analysis like this for yourself for only $5 a month. And if you have a stock you'd like to see featured, please comment below. Thank you, happy investing, go find some value.